What are the top 3 questions you should be asking your lender? You're going to be surprised of what doesn't fall into that top 3, but we're going to talk about that next. Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates, and we're going to start with those interest rates. So we are mid to late May of 2022, continuing to see interest rates rise. Now, from week to week, we saw a slight reprieve. We are just down slightly from last week. So we're at 5.25 according to Freddie Mac. You can check out the link below to the average 30-year fix. They do a great chart to kind of show you where interest rates are going. The last 8 of 10 weeks, we've seen interest rates rise. And to be honest, that has been the trend and will likely continue based on what I'm seeing in the market. So again, check out that link below. You can see that historical chart. While you're down there, hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, this week's episode, we're going to talk about the top 3 questions you should be asking your loan officer, your mortgage company, your lender, right? And we're going to start with number 1 of what does not fall on the list, and that's interest rate. Now, maybe I just blew your mind, or maybe you're going to tune out and you're not going to believe me, but if you start with rate, I could offer you, say, 4.5% on a 30-year fix, which is well below the average, again, if you went down and hit that link. But consider that my fees are astronomically high to get you that interest rate. There's a couple of the .com lenders that are very, very typically putting points on their quotes. I can think of one of the absolute largest. There's a study done that their average quote had 1.78 points. That means if you're doing a, say, $500,000 loan, the average quote that you got from this company was with roughly $9,000 of additional fees, right? So if you just start, hey, what's your rate? What's this? And not ask on the fee structure and see the rest of that, like, that's why that question does not even fall into the top 3. And I've been doing this for over 10 years. Won a bunch of awards, been, relevant at least in my market. And I don't say that to impress anyone that may be watching this, but just more to impress upon the audience that, hey, I've been doing this for a long time, and the knowledge and understanding of what borrowers are walking into and what they need to better understand, these are the top 3. So number 1 is monthly payment. Understand, what are those property taxes? What are the insurance? Is it in a flood zone? It is not. Are you going to need mortgage insurance? And of course, what is the monthly payment on the principal and interest? That is by far the most important, because if you go into a transaction and that monthly payment is going to be above or slightly above or exceeding what you feel is your monthly budget, you're setting yourself up for failure. You're setting yourself up for an emotional roller coaster of owning this property, even if you can get qualified for it. My goodness, if I was worried about making that mortgage payment on the 1st of every month, that is not a good situation for anybody. So number 2, you want to look at cash to close. And this is kind of where my original point of is see what fees are being charged by the lender to be able to originate that loan or to get that rate or to do that transaction. Understand what your total cash to close is. And any lender that tells you, oh, we're just not sure yet, that's absolute BS. You can get down to within maybe 1 to 2% of a total of what your cash to close will be right up front. There should be no doubt of what that looks like. Now, there is definitely some estimates that once we get invoices, we can tell you, but you need to better understand exactly what that cash to close is, set up as a worst case and say, a monthly payment under $2,500, cash to close under $80,000, and that will give you a good sense of what that transaction is going to look like. And then finally, number 3, and I think this is maybe even potentially most important, because the first 2 are moot unless this number 3. What is your pre-approval process, right? What do you do to pre-approve me, and how are you going to help me acquire that home? If you cannot get your offer accepted, then whatever rate is, whatever the fees are, whatever anything else, whatever the monthly payment is, none of that matters if you can get the home. And, I could go on for 10 minutes about what my team does and what our pre-approval means in our current market, but you need to be asking that question of your loan officer. Are you calling the listage? Are you doing something else? you know, when my pre-approval letter is offered out there, it means something because we have market share in, you know, kind of the North Shore, Chicagoland. It means something versus someone like a .com, for instance, that doesn't have any necessary relevance or market share within the current kind of metro area. So number one, just to go back through payment. Number two, cash to close. And number three, what is your process for pre-approval, and how are you going to help me get that home? Because without that home, none of this happens. So I hope this was helpful. Thank you so much for tuning in. Again, hit that like button, hit that subscribe, click that bell icon, and we'll see each other again very, very soon.